Okay, stay on with us, Vishy, because we're getting into this conversation with Abizer Diwanji, founder at Neostrat Advisors, joining in now to just understand the implications of this. Abizer, let's start with the obvious. Obviously, a big deal for AU Small Finance Bank, but what is it also telling us about the RBI's direction?
So RBI's direction very clearly, and as Vishy just pointed out the numbers, by the way, AU is no longer small. It's proven that it's large. It's a lakh crore of advances. And a measured advances base. So all RBI is looking for, and Vishy did say that satisfactory means subjective. But I would like to come in here to say actually that RBI looks at very objective performances. If you look at AU's performance, a 30% CAGR in advances over time, coupled with a 6% or 5.9 odd percent NIM, and a gross NPA of 2%. Now, if you compare this with, say, ICICI Bank, for example, NIM is around 4.5%. Which basically means that the 1.5% headroom that ICICI Bank has on the gross NPA side. Because you remember that if your NIMs are higher, means you're doing more riskier assets. More riskier assets means higher GNPA. Now, the RBI says that you got to control your GNPA within 3%, which AU has done, for example. And it has made sure that while the GNPA is higher, it is more than compensated by the NIM. And assuming a 2 to 3 year loan, the annual GNPA cost is around 1%. So if you reduce 1% from the 6% NIM that they earn, they are still earning a NIM of 5% net of risk. So this is the kind of performance RBI looks for. Now, how does this performance come about? And what differentiates the men from the boys in AU situation in particular is the fact that one, the organization is very well governed. And secondly, it has done a very nice and layered path to growth. It's, as I said, it's AU financiers earlier, then moving into a small finance bank, proving its capability as a small finance bank, and now being eligible for a universal license. In my opinion, they are much more a calibrated and well thought through decision for a commercial bank than anybody else.
Good morning. Incidentally, what you described at the start is exactly how Vishy started his presentation. He said,
absolutely,
AU Small Finance Bank no longer small. I'm just wondering what you think about the last entity that got this universal banking license. And I'm wondering what AU Small Finance Bank needs to do to avoid the missteps that it saw. From a management or governance standpoint, as well as from a business strategy standpoint.
So one, on the governance front, I think there is a high degree of perception and proven trust organization. In AU Finance, in my opinion. So they have actually proven the fact that they are well governed. The other thing is they started with an NBFC mindset. Unfortunately, for others, small finance banks have been given to microfinance mindsets. And if the aim is to make sure that we get the middle of India, which is the MFI or the micro enterprise segment or the small business loan segment, to actually gain traction through a small finance bank, then rather than a microfinance, so it's all in hindsight, of course, I think RBI took the right decisions at the right time. But in hindsight, it seems to have proven that an NBFC model into small business secured loans is a better proposition to create a trust organization than actually a microfinance organization. So organizationally, AU was better because they ended up, they were started off as an NBFC doing small business loans. And thereafter, the governance and the diversification of shareholders, they were one of the first to divest out to Motilal Oswal. I remember much earlier, and while others decided to hold to their shareholdings and not gain capital and try to leverage their balance sheets. AU decided to expand the capital base and grow the business. So that, along with governance, has played out, in my opinion.
Mr. Diwanji, if you were to look at, Vishwanath, if you were to look at where the last couple of bank licenses came, right? IDFC First versus Bandhan, similar dichotomy between an NBFC and then a microfinance lender. There, I'm not sure which has come out on top because, the results-wise, yeah, Bandhan has had a few missteps, but it's not that IDFC First has come out flying. The other part to this, when it came to AU Small Finance Bank, their entry into credit cards and their entry into microfinance with that acquisition that they made of FinCare, both have not panned out as successfully as one would have thought. In fact, the management has been on record to say that we've made some missteps and we are trying to circumvent those problems and trying to make it better. does that prove that the management does not have probably the required bandwidth to start something new entirely? Because now you'll have corporate banking, now you'll have investment banking, now you'll have international banking.
So one, microfinance came at a time when the industry too suffered. So you got to give them some respite for the fact that, and microfinance is, by the way, a very patient business to grow and a cyclical business at one. So if you look at microfinance coupled with small business loans coming together, that is a winning combination. Because at the end of the day, you need that stable organization, a stable NIM, a stable level of profitability to be able to deal with the cyclicality of a microfinance business. So I would not say it's a misstep. Yes, it's difficult to manage because it's a different mindset. And hence, that is where I think that misstep may have happened. On credit card, again, the whole unsecured loan, personal loan phenomenon that's happening in India right now is much larger. And AU has suffered possibly because it's among the smaller ones. And hence, the hit on the smaller one, or the perception hit also on the smaller one, is the maximum, as we have discussed in the past. So I think these are businesses which are cyclical and over time will stabilize. As far as other businesses are concerned, it's a complete mindset change that will have to be brought in. And we've seen that. AU Finance has gotten the mindset change from that of a small NBFC to being a small finance bank, and hopefully will transition well into a larger bank. But the transition will be required. And I think as long as the bank management is conscious of the fact that international banking, for example, or trade finance, for example, or even setting up diversified financial services businesses below a bank, which is non-bank businesses that are allowed, will require a lot more skill set addition. And as long as they don't try to do it themselves, but try and acquire the right skills to do it, I think it will be good.
Abizer, Neeraj here. I know you're not an equity advisor. I'm just trying to lay out a base for our viewers to get a sense of what to do in a scenario like this, right? So here's my the base is that a lot of banking names currently are not trading at very expensive valuations. So therefore, and that's the base. Now the question to you is, from a growth of business perspective, would it be better to bet on the growth of a business of, let's say, an AU which has to make this transition, will probably do it, but still not known, versus some of the others which are established and likely, and if they can grow well, then the valuations are anyways not expensive. I'm just trying to kind of muddle this together to try and get a sense from you of whose business would you bet on.
So clearly valuation will become a discussion point, because incremental capital will be required to grow these businesses, and banking is a business where capital is the raw material. So I think the valuation question is pertinent. The way I would look at it is, as long as AU's base is where it is and it is able to show a strong performance by managing governance and by getting the right skill sets into the organization, and right skill sets is about having a democratic organization which is run well, which I think is happening in AU. I'm not privy to as much internal, but from whatever perceptions I get, if that organization is managed in a democratic manner with the right level of governance, I think growth will come. Now, will book multiples moderate as growth happens? Of course. Because at the end of the day, you will find that absolute value in terms of market cap will keep increasing, but the book multiple may shrink beyond a point. But as long as the actual value will increase only when there is growth in business and diversification. Look at it the other way, that there is so much opportunity for now a bank to diversify, while others have already achieved their levels of growth and are mature organizations. That's why they are traded at lower multiples.
No, that's very well described. Abizer, well, trust you to cover all grounds, and thank you for doing that so beautifully with us today. Really appreciate your time.
Thank you. Thank you.